Morning, Steve Freed with the morning grain comments. Markets are mixed with soybeans higher, wheat mixed, and corn maybe a little bit lower. Outside markets, you got the dollar lower and crude lower. Again, markets are trying to balance all of the global events, plus the recent Fed chairman talk about delaying tapering, and also just general demand because of the spread of COVID. China's PMI non-manufacturing data was less than expected at 47.5 versus 53.3 last year, suggesting their economy continues to slow. We also note that most of the Dalian soybean, corn, soybean oil, and palm oil futures are lower. Nearby soybean meal is higher, but the deferreds are also lower. Yesterday, we saw a steep decline in nearby grains because of concern that IDA is going to reduce export capacity at the Gulf. Right now, there's only one grain elevator that may have seen some damage. The rest should be okay, except electricity remains out in some of those areas. Exports numbers have been on the down slide, and so hopefully everything will be back to normal soon for the post-harvest numbers. As far as technical considerations, we did some damage yesterday, especially in the wheat market. Nearby beans continue to be in this wedge formation between 1278 and 1362. Corn 533 versus 563 with a long-term objective if we break out of this wedge on the upside at 583. We broke below 718 support yesterday in Chicago wheat. Both Kansas City and Chicago now are in a $7, $7.15 range, depending upon demand. The USDA came out and said that 9% of the U.S. corn crop is mature versus 10 average. Kentucky 30, we've got Tennessee 25, Illinois 4, Iowa 6. Crop conditions improved in Illinois, Minnesota, and Wisconsin, while they dropped in Indiana, Michigan, and Ohio. Crop is still rated 60% good to excellent versus 60 last week and 62 last year. And some people feel that because of the September 1 ratings are basically below August, USDA may not increase their yield of 174 on the September 10th report. Beans also continue to be rated 56% good to excellent versus 56 last week and 63 last year. Crops dropped in Arkansas, Indiana, Iowa, Missouri, Ohio, and South Dakota went up in Tennessee, North Dakota, Louisiana, and Illinois. And 88% of the spring wheat crop is harvested versus 71 average, and 9% of the U.S. soybean crop is dropping leaves versus 7 average. So again, trying to find value based on projected demand. The bulls still look at lower 21-22 U.S. corn ending stocks as positive. Look at lower Canada wheat, lower Russian wheat numbers as positive to wheat. Soybeans are just kind of sitting there trying to figure out what China demand is going to be and what South American competition is going to be. Right now, it looks like they could have some more dry weather next year in southern Brazil and Argentina. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.